This conference will now be recorded.
All right. Today we'll start a discussion officially on S4HANA Finance.
Yeah.
I prepared a very high-level curriculum, but as we in detail of the different topics. But in general, I'll cover S4HANA Finance overview and some highlights in S4HANA Finance, right from 1511. What are the new enhancements or innovations SAP has introduced in 1511, 1610, and 1709? So far, what SAP has done on that, and briefly go on to SAP Fiori. We may not be going Fiori into great detail, but to the extent of the points that we discussed in our earlier calls, I'll go upon that, and we also execute few Fiori reports for the backend configuration that we do on the on-premise. Okay, and then finance enterprise structure. This will give you the basic setup of the finance enterprise, like creating company codes, operating concern, controlling area, and the other integration aspects like sales organizations, plans creation. All that we'll cover in the enterprise structure. Then we'll get into the core finance bit, general ledger, accounts receivables, account payables. Apart from discussing the business process, we'll also concentrate on how to set up the ledgers, currencies, document types, payment programs, and account payables, customers and vendor setup, business partners is the new customer and vendor integration. So we'll also deal and
Hello.
hello. Were you with me,
Yeah.
or did I lost you?
Yeah. Actually, my connection was disconnected. So again, I
Okay,
connected.
not sure.
Yeah. Sorry.
I'm not sure how which point you got disconnected. Let's
You
go to the
you were
previous point.
talking about Fury.
Okay. Well, we'll go into the Fury to the extent of what different types of Fury apps that are available, and different reports that we'll run. We'll execute few transactions using Fury, and also see how to create a new tail and add to your a catalog. All that we'll see in a little bit detail. Then we'll also concentrate on SAP finance enterprise structure, where you will understand how to create how to set up an enterprise structure before starting an implementation. Apart from the configuration, I'll also discuss the business process. If you're doing a configuration, what type of questions you need to ask to the client, so that you understand their requirement clearly, and you can also advise them in certain areas. So this covers setting up the operating concern, controlling area, company codes, and the credit controlling areas, all that. And from your integration, organizational elements as well, like plants, sales organizations. We will see how they're created and how they're interlinked, so that in an ERP, when you post transaction from different places, how that ends up into finance. Then we'll get a bit more detail into the finance core concepts, like general ledger, accounts receivables, and payables. There, I'll introduce you, or make you aware how the ledgers are created, how different currency types are created, how the group currency how will take place, how that is related to linked to your ledgers. And in the accounts receivables and payables, coming to the master data, now they're called the business partners. So how the customer and vendor integration is done, different payment terms, how they're used, and the payment programs, how they are used to make the payment for vendors. All these topics we'll cover, apart from the basic configuration, like document types, posting keys, and so on and so forth. Then we'll go into the bank accounting, where I'll tell you how bank configuration is done, how the house banks are set up, if the company is having different bank accounts in different currencies, how they are all linked, how the different payment methods that are created to make the payments in CHAPS, using CHAPS or check payments or wire transfers, how that all integrated in SAP, how you integrate that with vendor accounts. We'll discuss those concepts in bank accounting. Coming to asset accounting, here we will discuss the integration between the asset accounting and general ledger, how the postings that you do on asset accounting reflect on the general ledger, how different accounting principles or the accounting standards can be met with the asset accounting in SAP. We'll discuss those concepts, how depreciation is run and all that. Then that gives us the good a base or solid base for the understanding the financial accounting. With that base, we'll move into the management accounting, which is controlling, and that we'll discuss the basic concepts of cost center accounting, wherein I'll introduce you how to create cost centers and a bit of cost center planning, different versions, and bit more into the controlling area, controlling area setup, maintenance, how those are created, all that. And in cost element accounting, it is not in great detail that's available in management accounting. These are purely used to, like the general ledger accounts on the finance side, cost elements are used on the management accounting side. We'll get a bit more detail there when we get into controlling part. And then I'll also introduce you to the internal orders, with the significance internal orders, why these are used, how they can be used for cost controlling, how the budgets and availability control can be used on that to control cost, either on the project or on an assignment, how they can be linked. And in controlling the financial costs, how these are useful. We'll discuss all those concepts. Then we'll move on to the profitability analysis, where I'll introduce you to a bit more into the operating concern, characteristics, how they're created, what's the significance in your designing something, what you need to take into consideration to come up with the characteristics, apart from the 50 characteristics which SAP standardly provides. And we'll also look into the value fields. Value fields are the measures on which you actually measure your profitability. That could be by the product or by the customer profitability or a product group profitability, different dimensions that can be used to measure the profitability. We'll see how that is created in SAP, and if time permits, we'll also look into creation of a report to do the profitability analysis, or we'll use something as a line item report in SAP, which SAP provides, to see how different things are tied together, which are the transactions that are posted in financial accounting, how they're reflecting in the profitability analysis, giving the user a dimension to analyze profits. So with the profitability analysis discussion, we'll be at the conclusion of our course, and during the course, if you feel any of the topics that need to be we need to get into more detail or elaborated, please feel free to raise those questions. We'll go in detail wherever it is required and necessary. Okay. How does it sound to you?
Great. That's great. Great. Thank you. Thank you, Vijay. One question here. Is bank accounting new feature in completely new feature in S4HANA, or it was there? I'm not aware about that.
It's there already. But what happened in S4HANA is it's a bit of a marketing they're doing here in bank accounting, and also in the cash management areas. So what happened earlier in ECC is you have the all different bank configurations and the cash management, treasury management that is available as a standard in SAP with all the functionalities. What they've done in S4HANA is they retained the basic configuration in S4HANA, and they've added a few more bits as the bank account management as a separate module with a separate license. but the basic stuff related to payment to vendors or receipts from the customers, all that basic configuration is still available in standard SAP. That's called the bank accounting lite.
Okay.
And anything related to the treasury management, which used to be part of ECC, has now moved into the cash management as a separate module, which requires a separate license again. All included in that, like the and integrated that with financial supply chain management, like the collection disputes, all that as a treasury management has come up with a bit more a big module where you could do the cash flow statements, indirect cash flows, or the direct cash flow statements. All that are now not part of the standard box, but there is a separate license. But the basic bank accounting is part of ECC and as well as S4HANA. Right.
Thank you.
Now, I'm not going into the basic details of how HANA is evolved, because we discussed it in our demo. To save time, I'll just concentrate on the new architecture that is in S4HANA Finance. Right. And if you have, if you want with more details on the HANA database and how HANA is evolved, I can share you some documents. You can those are self-explanatory. You can go through that, and if you have any questions, we can have a separate discussion on that. But let's concentrate mainly on the finance structure in HANA. So with HANA. The introduction of HANA happened in 2011, 2012 around, with the database as a HANA database created or introduced or innovated, whatever that is called. With that, the database structure has moved from the row database into the columnar database. Just to give you a flavor of what columnar database means. When a database is nothing but tables, right? When talking about tables, it is rows and columns, correct? So traditionally, when a data is stored in database tables, it is stored in the fashion of rows. So for every record I created a row is created with all the columns there that are populated, that are required. In case of a general ledger, let's suppose the ledger details, company details, account details, and all that what you're seeing on the screen. So like this, the multiple records are created. And whenever an update is done, even though update is done only in one or two columns, maybe the account is changed or the amount is changed or the a company is changed, the company description is changed, what could be the change? Only those fields are changed. Even though only those fields are changed, system has to create the entire record with the new details and as well as with the old details in the same record. So it's a lot of data replication has been done. So that increases the data redundancy, also the size of the database. When the database size increases, you need something to do the aggregation to get to the aggregated reports for the users. So they come up with aggregated tables. And for that aggregate tables, you need an index to tell you which aggregate table holds what type of details. So that comes the index tables. So all that has become very complex and very mass in detail. At least 70 to 75% of the code was written to improve the performance of the system itself. So that gave the way to come out of that traditional database and go into a different type of database called columnar database. The basic difference between the row database and columnar database is, in columnar database, each column is created as a file. Let's suppose consider the case of your own system. You have a folder. In that folder, you have one big file with Excel file with 100 rows and 100 columns and all that. And if you want to open that file, it takes a long time for system to open that file, because it need to populate the details in all the 100 rows in all the 100 columns. And if it has got any formulas, it takes a bit more time to calculate the values whenever you open the file. Consider about that as the traditional row columnar database, sorry, a row database. Now coming to the columnar, if you create the same spreadsheet, I've got 100 different columns. You split that into multiple files, and when you open an individual file, it becomes very easy for system to open because it is only a certain data that need to populate in the file, so it will become very easy. And with the columnar database, whenever the data is stored, there is an one index table created with all the details as a one record instead of multiple index tables in the previously architecture structure. So that gave an inherent advantage in improving the performance. So, and that also given the large amount of data space that is available. So with that, the new performance tools have come into picture, and the storing of the data inside the memory itself has come into picture. So that is called the in-memory database. HANA is an in-memory database. You don't need a separate a memory or a separate database to store the data and do analytical processing. Everything can be done within the database itself. So that gave the advantage or a flexibility for SAP to come up something called as an universal journal. This is a universal journal. Don't think this is as an accounting entry. This is a table itself, universal journal. The word universal perfectly suits for this, as I explained in the demo earlier. It has got the details of, as you can see, it has got the details of the general ledger. It has got the details of COPA. It has got details of the material ledger for the material valuation purposes. Got the details of asset accounting. Got the details of controlling as well. So all the details now instead in ECC, which were stored in different tables, are now stored in entirely in one table, universal journal. Think about a case when you have these many tables in an ECC, GL, ACOPA, material ledger, asset accounting, and controlling. If a user needs to call out a report, an integrated report, he wants to call out a COPA report. That COPA report has got needed some details from the journal ledger. So there need to be a linkage between the COPA pair tables and the GL tables, maybe happening through aggregated tables or through index tables. So it needed a additional code to read those details, do the calculations, and come up with a report, and so on and so forth with the other tables. Now, because all the details are in one single table called universal journal, it becomes very easy to retrieve the data and do some calculations. So that gives the tremendous amount of performance advantage in using S4 HANA. So that's the universal journal. Just got. I'll show you in the system how this table looks like as well. And with that, the new architecture itself, it is given given the scope to increase or to come up something new in the finance data model. Earlier, if you had an opportunity to understand the finance model, they used to have different tables in finance itself. The basic tables are the BKPF, which is the header level table, BSEC, which is a line item table. And apart from this, there used to be BSIS, which is uh, for the general ledger, open items and the cleared item, BSIS, BSAS, these are the index tables. And some similarly for customers, they used to have BSID and BSAD. These are the index tables to store the open items and the cleared items. BSAK for the vendors, and they've called something else FAGL basis and base as Fagel Flex T, Fagel Flex A. All these tables, these are the totals tables, aggregated tables, GLT0, GLT3. All these are used to aggregate the data that is in BSEC, because BSEC is a very huge table, and that is coupled with the BKPF, which stores the header level details. With the new data architecture and with the universal journal, there is no need at all for all these tables together now, because everything is done in the database and in one table, which is the universal journal, which is also called the single source of truth. everything is recorded in one table, in one column, or in one row, with all the relevant details of different modules, be it COPA, be it asset accounting, be it material valuation, or be it controlling. All the details are available in one case. So all these tables are now eliminated. There are separate SAP notes which gives the exhaustive list of tables and the transaction codes that were removed from S4HANA. I've included that in this presentation. And with the old tables deleted, you may have in your legacy systems values in these tables. So in order to keep those values so that you don't lose the data, they come up with something called as the core data services, which are created on the back of these tables just to store the data, but they do not record any new details, but they are used only for the legacy details. Think about a case where an organization is not going for a greenfield, but it is converting or migrating from ECC into S4HANA. In those cases, you still need these tables to access the earlier year or the legacy data. So these tables are still available, but not as a table, but as a CDS view. So they've extended these tables with underscore CDS or a backup, BAK, to store the data that is already there, so that the users do not lose the visibility of those details. Any questions so far?
Yes, I have two questions.
Mm-hmm.
First, what is the difference between CDS view and CDS? Sorry, CDS view and view, normal view. Is it normal view or it's different?
CDS view is a table view which is
Mhm.
available for the programs to be used in the to call for any legacy data specifically, and
Yeah,
the
my point is,
views. Yeah, and the
my point
yeah,
is
go.
here. Sorry, Vijay. Yeah, uh, actually, I was thinking viewpoint of view. I know what is view. It's a combination of multiple tables.
Mhm.
So I was thinking whether CDS view is also same view or it's a bit different
It's a
architecture
diff.
wise or
It's a
okay.
different. It is created only on one table. It's called the
Mm-hmm.
BSIS CDS.
Okay. Okay. So as you said, it contains only legacy data. So after migration,
BSIS.
say again, Vijay. Actually, your voice were breaking, I think.
Sorry. What I said is the CDS views are created on the individual tables. You'll have a CDS view
Okay. Mm-hmm.
for each of these tables, which got now deleted in the new HANA architecture. But they are available as CDS views, so that if you have used any of these tables in your legacy coding, from
Mm-hmm.
to make them work in a HANA environment as well, these tables need to be changed from this table into the CDS view,
Mm-hmm.
because they
Okay.
do not accept no new data. They provided only the visibility of these tables in the form of a view that is called the core data services view.
Okay. Got it.
Yeah,
So if client has any custom report or anything, in that case they have to change the coding in custom
correct,
report or customized field as well, right?
correct.
Okay.
They need to do the reference instead of from the BSIS into the BSIS CDS.
Okay. Got it. Thank you.
Yeah. And this is just a brief of a slice of the tables that were deleted. See here, the table is a BS80, and now the compatibility view is created as the BS80 with the same name, so that users don't lose the visibility of the existing coding, whatever they have. And in the data dictionary, the tables are created with DDL, and the backup tables are created with BS80. All these are available with the legacy data only. If you are a greenfield implementation, you don't see these tables at all with any details in the system. This is only for the conversion to have the visibility for the legacy details, legacy data. And on the right bottom corner, I've given a few tables that are newly created. The universal journal is coded as AC doc A, accounting document A represents the actual line items. AC doc C represents the consolidation journals. AC doc P represents the planning data, and AC doc T represents the totals view on the AC doc. So these are the account the new finance data model. You can see the large amount of tables that we used to have in ECC are now compressed into a uh, uh, few HANA tables. And these are different nodes. You can also access them separately. Describes what are the data model changes, basically what tables are deleted, what new tables are created, and what is the CDS views that are created on different tables. And with the new HANA HANA database and the HANA innovations, quite a few transactions got deleted actually. So this is the for some of those new transaction codes have been given, something like foreign currency valuation. It used to be FHGL underscore val. Now it's been replaced with FC underscore VL. So something like that. Few changes have been made. Oh, they come up with the new transaction codes, and this a node is a live node. Live node in sense it is coming up with the new versions with each release of HANA, and they're updating this node with the new changes. So now I'll go on to the few. Yeah, go on.
One question. Sorry. The question is related to new transaction codes. So, as you said, there are few transaction codes which are replaced, obsolete, or there are new transaction codes in S4HANA. So, if I'm thinking about the GRC point of view, so there we use the rule set in access control, right? To in order to monitor the SOD segregation of duties. Okay. So do you have a list of vast list of S4HANA SOD rule set or HANA rule set? I don't know this is relevant for you or not.
No, I've not heard of them before. But if you tell me where to look for those, then maybe I can have a look and I'll tell you if that is available. If not, I've not heard of them before. What is it called? Rule set, right?
Yeah, rule set, SOD rule set.
Okay. Does this SAP provides this, or is it stored in?
Yeah, SAP provides it.
Okay, I'm not aware of. Sorry.
So what it contains the list of transaction codes. So earlier what happened, it for ERP system it contains the list of transaction codes, and suppose I'm a person, I'm creating purchase order and I'm also approving the purchase order, so that would be a violation in the organization, right?
Correct.
So we monitor those kind of violations in the system. So if any violation would be there, then it will be notified to the client. So if the transaction codes are changed and created new one, then definitely I'm 100% sure SAP has provided a new rule set for S4HANA and HANA both.
Okay.
Yeah.
Maybe that comes as the GRC bit, a separate load, not come across in the standard
Finance.
finance
Yeah.
models.
Yeah. I completely agree. If you able to find with your
Yes, I'll
contacts,
try to
then
find
that
some
would be great.
source. Yes.
Yeah. Great. Thank you very much.
No problem. Now, there are quite a few innovations in every release, but I'm just highlighting few which are a game changer in that release. Uh, but if you go to the document called as the um, simplification list, which will be released for every release, like 1511 has got a simplification list which will detail all the innovations that are included in that release. It, it 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 is a humongous document, I must say, containing about 600-700 pages for each release, which will have the general understanding overview describing the first of an overview of the release, and then it gets into the line of businesses, finance innovations, sales and distribution innovations, and then also the industry innovations, IS oil or IS retail, different innovations in each of those. So it is a comprehensive document. It's available online in SAP portal. If you don't know the website, I can share you the website after this call today. If you go to that, the repository is stored per release. If you select 1511 in the drop down, it gets you to, maybe I can give you a view of that so that when you get into the next time, you can see what it is. So it is called as a HANA portal, specifically created for the things to be shared around HANA. I'll share you this on the chart. Right. So can you see the screen?
Yeah, I can.
Yeah. So in this HANA portal, this is the version that you can select. It has got documents right from 1511 into the latest 1709 FPS. FPS is featured package stack. Sorry. So when you look into this one, either you can do the search by product or all products if you're searching for any specific product, but I generally use the version. It gives all the details that are required. It first give you what is the new in this across all the modules, all the domains, and all the industries. Uh, this is the simplification catalog, and this is the simplification list which I was mentioning to you. It is a humongous document. It's available in PDF. You can download it. This contains a full list of innovations in this version, what they've introduced. It also gives a bit of flavor of the old versions as well, and it also gives you what's been deleted, what's been newly introduced, any functionality that's been introduced. Everything will be contained in this document, and this will be released the moment the new release is up for the customers to grab. So this is there from 1511. Times it will be, I completely understand there's a huge documents, but if you concentrate on the only on the finance, not going into the industries, just the domain finance, then you will understand as an overview what has been changed, what has been introduced. Maybe if you look into the GRC bits as well, you will know what changes it has brought up in the GRC area as well. This is a very useful science. So please. Going back to this one, starting with 1511. 1511 is a version where S4HANA Simple Finance has got merged, or has no longer been called a Simple Finance. It's become a suite of HANA from 1511, which is with the other modules as well, like materials management, sales and distribution, production planning, manufacturing, and all that. So particularly for finance, the account-based COPA has been enhanced from 1511, wherein a few disadvantages it has before were all been addressed, so that people could use account-based COPA. We'll touch upon account-based COPA when we discuss the profitability analysis, uh, how different methods are created to calculate the profitability, giving the users an analytical capability in analyzing the profitability. We'll come into that. But for now, understand that there's a lot of enhancement has been done to use account-based COPA. And on the material ledger has been made mandatory when if material valuation is required for any customer. And that being said, there's something called as actual costing. We'll also touch upon these two topics briefly when we discuss the management accounting a few classes later. This has become mandatory. Material ledger gives a flexibility for the customers to value materials in different currencies. In the traditional ECC, material ledger was still available, but that was optional for any customer to activate it because of complexity that it brings with it. But in S4HANA, the processes and the configuration and everything is made a bit simpler, and it's been made mandate so that it gives an inherent capability for the customers to do the material valuation. Material valuation in the sense the inventory valuation, I mean, in different currencies. So that's a flexibility that SAP is offering. And in 1610, the parallel currencies, 10 different type of currency types are now available for the user to define for themselves. They're called the custom currency types. User can define and assign that to their ledgers to do the parallel currency and parallel postings. We'll touch upon that when we come to the general ledger setup. And SAP has got a module called business planning and consolidation, where in which this particular module is used to do the planning, like the cost center planning, cost element planning, GL planning, or profitability planning. All that in a great detail can be done in the BPC, and also the consolidation. Getting the details from different systems and different clients, you could do the consolidation. So that was the a separate setup or a separate system in ECC, but with the HANA database, they've embedded that into ECC itself. The BBC consider this as an analytical tool, because now the analytics can be done in the database itself. It makes perfect sense to bring the analytical tools into the database itself, into the core module. So that's the reason now they've embedded a BPC into standard SAP. With 1709, there's a concept called document splitting already available in ECC also, but it was not available to introduce document splitting if a company code is already live. But with 1709 release, they've come up with an innovation that can be activated uh, during the fiscal year. Not That's not completely true. Not during the fiscal year, but if the company code is in a productive environment, is productive, even then you could do. There are certain rules when you can activate it. Only at the start of the year, it has to be 1 year on the new general ledger, then only it can be done. So there are certain rules that are there, but it provides you a flexibility or an opportunity to introduce document splitting in S4HANA, even if you do not have that in your legacy system in ECC. We'll touch upon document splitting when we come into the general ledger concepts. And one of the disadvantages ECC used to have in terms of profitability analysis was purely in the account based. There are two different methods, account based and the costing based. We'll come in detail when we discuss the operating concern, but just understand there are two methods, and the basic difference between the two methods for customers to choose between a profitability analysis is one method gives them the greater details of the cost analysis. It breaks the cost or the product cost into multiple components. Let's say when I say a product cost, it is a combination, or it is an aggregation of different components. It will have the material cost, it will have the marketing cost, it will have the overhead cost, it will have the sales and distribution costs. So all this put together becomes the product cost of a product. Correct? Are you with me on that?
Yeah.
Yeah. So the account-based COPA is not able to give that type of a breakup when a customer wants to do a profitability analysis. But whereas the costing-based COPA is able to give that flexibility to split the cost into multiple components and do the cost analysis or the profitability reporting as well. So that was the main differentiators for customers to choose what method of COPA that they want to use, either the account based or the costing based. So with HANA and with 1709, they've done great enhancements in the product cost split and give it into COPA, and in within the account based COPA itself. So the main differentiator which used to be there in ECC between these two methods of COPA has now eradicated, I must say. So that's the enhancements that they're doing in account based COPA. So now they've come up with that the cost component split also, which was not available in ECC in the account based COPA. Now it is available in account based COPA as well. So that gives the a bit more flexibility for users to do the profitability analysis using the account based COPA itself. So these are few highlights which they've introduced. Don't worry if you did not get a few or all of these topics. I completely understand this may be new for you. We'll get into the details of each of these topics in our course later. So you'll be thorough with all these in few weeks time, or in after few classes.
Okay. Thank you.
Just touch upon the Fiori, just to introduce what it is. It's the new user interface. Having said that, it's not the complete demise of the old SAP screens where we use SPRO or FB50 or different transactions to do the enter the transaction processing or to do the configuration. Though those are not completely demised, they are still available. So users need to go into the background a system and do the configuration. When I say users, the consultants still need to go back to the background, the traditional screens, the gray screens. They need to go there and do all the configurations. The Fiori is a front end tool, I must say, as it SAP projects it. It's a new interface giving a new user experience. It is this can be accessed from any type of mobile device, be it laptops or mobile phones, tabs, wherever those apps can be accessed, and you can view the details. And it has got the real-time a connection with the background HANA database, so it gets the details from that and gives the user different type of reports, be it an analytical report or be it line item reports or be it the master data reports, whatever the different reports that they would like to have. Basically, the Fiori has got different apps. Those are like our mobile apps, and those are divided broadly in three different categories. The the transactional apps, the analytical apps, the fact sheet apps. You can easily make out with that description. A transactional is something where you do the data entry into the system instead of going into the gray screens previously. Users can use these apps to do the data entry, like creating FP50. They can do using a Fiori app, or if they want to post a document or create a park document or something, they can do using these transactional apps, or make the payment to a vendor, run the payment program. They can do from the Fiori apps. And analytical reports. Um, at the analytical reports, I need to give you a bit more details in terms of a capability that HANA as a database added to the system. Uh, Traditionally, when we discussed about the database structure, think about a building, a situation of a building blocks. At the bottom of the building blocks, you have the database, which is recording all the line items on a day-to-day basis. It will have hundreds and hundreds of records, every day going into the database. And when a user wants to do any analytical report, not any transactional report, but an analytical report, let's say on a particular region, what is my sales value? A region is something that you need to derive based on certain parameters, or what is the profitability of my product group, a combination of product groups in a region. Okay, something like this. If user wants to have a certain analytical reports like this, it is not possible to analyze those line items as it is. They need more tools like the BW or the business intelligence on top of the database, so that they could build the cubes with the different combinations which user wants. And from that cubes, you need to have another tool to read the data, do the calculations as per the user requirement, and then produce the data. So this adding up a block by block on the traditional database, and increasing the complexity in the system. And in such situation, the analytical reports which user calls for may not be a real time, because it involves the data replication from the bottom database system into the data warehouse, and from the data warehouse the cubes need to be updated, and the from cubes, if you run a query on those cubes, then the aggregation and everything happens. So it is not real time. It takes time to replicate, to do this replication through background jobs or whatever the method that they use. And if something changes in the traditional database, let's suppose you added a new custom field into your database, to capture that details also during the transaction processing, then think about the ripple change that need to be made. The change need to be made in the BW or BI database, and also need to be added into the cubes, so that the users could see that details also in the analytical reports. So does that give you a complexity what it is available in the, even in now in few cases, if it is not in the HANA database? But with the HANA database, the analytical capability is also inbuilt in the database itself. So that is something called as the um, online analytical processing, OLAP, online analytical processing. Usually the traditional databases, they used to do only the OLTP, online transactional processing. They do only the transaction records, and they have another tool like BI and BW to do the analytical things, OLAP. But with HANA database, HANA can do both the transactions and as well as analytical at the same time. So those are called the embedded analytics. You must have heard the word. Embedded analytics is the catchword for HANA. It has the embedded analytics, and these are not any separate reports that you need to call for. I want to call for an analytical report which call for embedded analytic capability. No, The traditional reports, whatever the analytical reports that they have, something like the profitability reports or any flow charts that are required, or any pie charts that are required to do the analytics, all that can be run on the database as a normal report. So those are coming up with analytical apps in Fiori, where you could do you could maintain budgets in a different ways, or you could create reports, whatever is the different dimensions user would like to analyze. So it becomes so easy now, and the performance also increased. The runtime and the return of the data is in milliseconds. You could get the details of those analytical calculations. And the fact sheets are nothing but what exactly that's been entered into the system, something like a master data or a master data record that needs to be called up or to be maintained. Those are also available as the Fiori apps. We'll see those. We have another half an hour. So before getting into the lecture setup, maybe lecture will start from afresh from the next class. I'll just show you.
If you want to extend more half an hour, I'm fine.
Okay. Yeah. I'll get into the system and see. But depending on discussion, we'll see.
Okay.
Before that connects, in the Fiori, um, yeah, you may completely relate it to this one. The reason I'm saying that is when I say these statements, the students were not able to capture it completely. So what happens with Fiori is these apps come up as the role-based apps. You may completely relate with the things that you're doing in GRC. So,
Yeah.
um, like the CFO doesn't need to look into the transactional records or the master data type of things. He just need the financial statements or some analytical reports, the profitability reports, or some sales revenue reports, or some cost analysis reports. This is what he wants to see. So SAP has created a few apps based on the role. So if you select the role, it comes up with the entire group of the apps that can be associated with. So that gives a lot of flexibility in terms of assigning those roles to the persons that required to be using. So that is an additional advantage with Fiori. Sorry. Yeah. So this is the Fiori Launchpad. Have you seen the screen before?
Yeah. Yeah.
Okay. So you'll go to the app finder to find a few apps. That opens up the catalog, giving you the entire a list of apps that are available in the catalog, and those can be pick and choose so that you could add that to the user. And these catalogs can be created per user role. Something like I'm in a project now on the tax, which gives me the flexibility to add and delete only the apps that are relevant to the tax, and those are added into the catalog, a tax catalog. And whoever is working as a tax consultant in that project, those will be assigned with that catalog, so they can users can pick and choose what app they need to have. They'll not have access to the other apps. Something like if you want to run a finance report which is outside the tax catalog, I'll not be able to do that. Plan to make a request. If that app is added into the catalog, then I'll be able to get that, because this is a training system. Everything has been added into the catalog. So let's suppose if I see on the accounts payables, there's only one report coming up. I want to see multiple. Yeah. So this is the a subcatalog in a catalog, wherein in the this is a role, you could say, accounts payable analytics. If anyone wants to have this as a role, can be attached to the business user, and they will have access to all this in the catalog. And how to get from the catalog into the user menu, you need to pin that to the user. So it'll when you pin that, it'll ask you whether you want that in the different sections on the Fiori user launchpad. So I'll say I want that in my home, so that will get added. When we get back, you will see that. And let's say I want this as well in my home. I can do that. Like that. And let's see a few more. A few might not work because it's a training system. Bear in mind, users might be creating few apps which are not completely linked to the database. There are few on controlling generator closing. Something like that. If you just add those and click on home there, now you can see all of them are now created or added to your home screen. And there is a possibility also, you can group them together. All the asset related you can have as an asset accounting. Not sure if I'll be able to do it here. Yeah, edit homepage. You can have an add a group, something like, let's say, asset accounting. That gets there. And if I want to add a new, it gets back me here, and let's say I want that one there. So just drag and drop and play. So it's got there, something like that. So
Okay,
this is
got
some
it.
flexibility in Fiori. Yes.
Yeah, one question here. Suppose I'm a CFO of the company, so I will get the roles related to my role, right?
Mm-hmm.
Or how it will work? Or administrator, he will
Apps
assign
related
those
to you.
roles. Sorry.
Those will be the apps related to your role.
Mm-hmm. Oh, in left panel, which was showing, that was the role or apps.
That is a role. So in the app finder,
Mm-hmm.
these are all the different roles that are available, and
Yeah.
each role, if I click on that, you'll see these are the different apps. So each tile is an app. So this is an invoice
Mm-hmm.
processing analysis. So if I click on that, that gets into the app and then shows the details. So this is the on the left hand side, the list that we're saying, those are the different roles, and those get added to the business user, whoever needs it.
Okay. The role we will assign to the business user, and business
Correct.
user, based on the requirement, he can create the tile or app.
Correct.
Okay, cool.
So this is
Thank you.
something an analytical report which giving the details, and these are completely real time. If I'm if I make some change in that company code, the details relevant to this one, you can see the details are changing right away when you do the refresh. Okay.
Mm-hmm.
Um, so now we have some time. So let's get into the enterprise structure. Introduce to the few concepts there. So this is the background system. This is still available. Any configuration has to be done from here. You can also have a few apps created for a few of them, like creating the master data or creating some payment methods for the accounts payables and all that. That can be done, but majority of the configuration you come to Spro and then do the configuration. Right. So when you set up any organization, the finance is the key bit. I think I have a slide. Just all right. An enterprise structure in when you set up a new implementation, you need to set up the enterprise structure in the system. Enterprise structure is nothing but creating few objects in the system and then relating them so that when you do the transactions will flow as per the requirement or the user reporting requirements, I must say. So in setting up the enterprise structure, the finance will become the key team, or the finance will play the key role in terms of designing or defining the enterprise structure. So the finance consultant will have a very crucial role in this one. So what are the objects which need to be considered or which need to be created while setting up the enterprise structure? On top, you see the operating concern. This is where an organization will consolidate its revenues and costs to do its profitability. This is a purely for management accounting. It doesn't need to be there for external reporting for the financial information. The external financial information reporting is done at the company code level. These are called the legal entities. So you will be doing it at that level for the different countries as per the legal requirement. But that is not the only thing that companies or the board of directors will be doing. They need to analyze the company performance depending on whatever dimension that they choose. If it is a multinational organization, they may want to do by the product group or by region or by customer, whatever that is. That may not be or is not possible at an each company code level, and they want to do that analysis at the group level rather than individual company, or they want to do it the individual company but also at the group level. They need to have that flexibility. So they need to be there, a tool need to be there in the system to consolidate the revenues and costs so that they could do that type of a reporting, and that can be done at the operating concern level. Okay, here you'll have different methods as I introduced to you, the cost-based method or the costing-based method to do the profitability analysis. We'll come to that later. But understand that the operating concern is the high level, the top level business unit or organizational element wherein the revenues and costs are consolidated. So you may ask a question, so how many operating concerns a client can have? There is no limit as such how many operating concerns can a client have. A client in sense the SAP client I'm talking about. And I hope you understand the concept of client. I'm not going into much detail because you're already
Yeah.
into SAP, right? So
Yeah.
for the client, you can have more than one operating concern, but I have not seen clients where they've gone for multiple operating concerns because they need one place to do the consolidation. If you have two places, again, you need to have some tool to consolidate those two operating concerns and come up with a group level or an at the conglomerate level details. So usually, customers will have one operating concern unless there is a business need or requirement that they need to have a separate operating concern, which I have not seen so far. And one level below operating concern is called the controlling area. Controlling area is used only for or mainly for the management accounting purposes, where an organization needs to have a visibility of the cost across the legal entities or across the organization at the group level, and also to do the cost control, just to say in which particular plant is making a product cheaper, or which region is making the product cheaper, or which type of activity is costing more in different plants across the plant. So that type of analysis can be done at the controlling area level by consolidating the cost from the different company codes. So uh, that is for the management accounting purposes, where you create your cost centers, your products, and your costing sheets and everything are created at the controlling area level, which gives the flexibility to consolidate the cost from different legal entities into one controlling area. The relationship between the controlling area and the company code, from controlling area to company code, is 1 to n. One controlling area can have multiple company codes, but there is a restriction how they can be used. They all need to have the same operational chart of accounts. We'll come to that in a bit. What is operational chart of accounts? It's the list of general ledger accounts. So they need to have the similar or same chart of accounts assigned to them, so that they could use the one consolidated controlling area. I have seen cases where an organization is having multiple controlling areas. It is possible at that time, but they still be having one operating concern which consolidates the costing details from different controlling areas. I've seen a large a steel manufacturing organization which has controlling area, one for the Americas and one for the Europe and the rest of the world, or the APAC, wherein they wanted to analyze the costs or have the visibility of the costs only at one region, so that they could have a better cost control. So they've employed that because the operational chart of accounts were different for those regions. So that is giving them a challenge to consolidate everything into one controlling area. So they've gone for two different controlling areas to do their cost control and the cost consolidations. Then that brings us to another object called the company code. Whenever a user enters a transaction, he enters a transaction with reference to a company code. This is the most important and significant organizational unit which users will use on a day-to-day basis. They may not know what is an operating concern, they may not know what is a controlling area behind the scenes, what is happening, but they will know what company code that they need to book an accounting entry, or they will know an employee belongs to which company code. So this is the most common and widely used organizational unit in day-to-day transactions. This is where all the transactions that get recorded are consolidated. This may represent a legal entity. A legal entity could be one in a country, or it can be multiple as well. It purely guides how many company codes or how to structure the company codes in a for a customer. So the main requirement would be how they want to report their financials to the external organization. They want to do it as a one company. Let's suppose take an example of ArcelorMittal. It has got the a steel production units and the businesses across the world, right? But they want, when they want to report their financials in UK, they will have a legal entity in UK called as ArcelorMittal UK or something like that, which consolidates or reports all the transactions, all the sales transactions, and the all the expense transactions are recorded under that company code to generate the profitability and report profits, and report that to the financial organizations, be it the company's house, or be it the HMRC, or be it the banks, whatever that is. They'll report everything under that company, all the assets and liabilities for that company or that legal entity. And they may have a situation where all the steel business is completely identified separately with its own legal entity. They may have maybe a steel services as well, just making an hypothetical case. Steel services which is not related to the production of steel at all. This may be a separate consulting company, wherein because of they have vast experience in the steel production, they may set up something like a service. If any new entrant want to come into the steel business, if they want to have some consulting or something, some services, they may provide. ArcelorMittal can provide those services, but they keep all that revenues, costs, and the assets and liabilities completely separate from their regular steel business. So in that case, they can have a separate legal entity, maybe ArcelorMittal Steel Services or something like that, or consulting services. So they can have that as a legal entity, uh, which differentiates, basically the differentiation of the different services. So they can have that type as well. That becomes a complete legal entity with its own reporting structure, whatever that is. So that will be the guiding factor, whether a company should go for a multiple company codes, or everything can be done in one company code itself. Let's take the same example. ArcelorMittal has got the steel business, and as well as this a consulting arm, but their consulting arm is not that big. It doesn't have its own isolated revenues, or it does not have any assets or liabilities on its own. So what they can have is, they can have that as a small wing within the manufacturing organization itself, maybe the consulting services. Maybe it is not that big at this time that they need to report their revenues or their balance sheet separately. In that case, they may have that as a separate segment or a separate profit center created within a company code called ArcelorMittal UK Steel, whatever that is. So are you able to make the difference? What I'm trying to tell you in terms of
Yeah.
organizing or advising the client in understanding their business, how they need to structure their company code. It purely depends on how they need to report their financial information to the financial organizations. So that gives you the basics to go for a legal entity. And when a company has a legal entity to record its transactions in financial accounting, they need to have a general ledger account, right? Uh, Not sure if you have any finance background at all. Do you understand what a general ledger account means?
Yes, I can. Yeah, general ledger.
Perfect.
It will contain. It is a kind of book, or universal book, which contains all the
Yeah,
transactions.
correct. Yes. Yeah, that understanding is perfect. So in that books of accounts, you will have different general ledger accounts, something like the revenue account, or the salaries account, or the purchase accounts, where you record all the purchase transactions. So for all that, you will have a general ledger account created. All the general ledger accounts are listed in an object called a chart of accounts. Okay, and there are three different types of chart of accounts available in SAP. The operational chart of accounts, the group chart of accounts, and the country chart of accounts. There is a significance why they have three different ones. When I say, in our example, let's suppose our seller has got businesses across the globe in different countries. So think about a case, if anyone wants to do their consolidation and the view of the costs at the group level, they would want to see a similar type of cost, let's say salary expense, and in a specific general ledger account called salary expense itself. They do not want a Europe to be posting their salaries into the salary expense account, and US are posting that into something a labor cost account, which will make difficult at the group level to have a view at the group level what the entire salary cost, because in Europe they record that in a different GL account, and in US they record in a different GL account. So that makes them difficult to do the consolidation, or give them a proper view. So in those cases, what they do is they'll have an operational chart of accounts. What that means is across the organization, or be it the company code in the UK, be it the company code in Europe, be it the company code in America, be it the company code in US, wherever you are, if you're posting a salary expense, you use salary expense account only. That's specified in the operational chart of accounts. The advantage of that is the consolidation or the analysis becomes easy at the controlling area level or at the group level. Okay, right. So in a company like that, you may have hundreds of a chart of accounts, or the GLs created and added into the operational chart of accounts. So when the company grows, the complexity also grows. So in that case, you may want to group the similar accounts into one GL account. Let's take the example of salaries itself. Salaries will have a breakup of the basic pay, the holiday pay, and the sick allowance, whatever that is. You have different general ledger accounts, all are salary related itself. So when you do the group accounting, you don't need to look into how much is the overtime pay, or how much is the vacation pay across the group. You don't need to see that. If you want to see that, you can still see that at the group level, but usually you don't need to see that. So in those cases, you group all of them, all of different salary accounts, into one salary account, and keep it as a group account. And that groups are created as a separate set of accounts and assigned to the individual accounts. I'll show you in the system as well how this assignment is done. So with that, the different accounts are grouped into a fewer chunk of accounts. That becomes a bit more easy for the group accountants to do the consolidation of the group accounts. And there is another one called country chart of accounts. This is where a particular country, to meet their the legal requirements or the reporting requirements. Something countries like Mexico or Brazil, they have a very specific requirement to report certain type of expenses or transactions in a government provided general ledger account number only, because in that country they want to analyze or they want to consolidate all the expenses or all the reporting that is done in that country in that particular general ledger account only, something like that. This requirement exists in Brazil. So in those cases, you will have to report the financial statement on that general ledger account only, whatever the government provides as a number. So to cater that, we will create something called as country chart of accounts. This need not be elaborated as operational chart of accounts. You could create only the ones that are required to be posted on a specific GL account in that country. And we will link that GL account to the operational chart of account GL account in the master data, so that when a transaction is posted, it will go into the group chart of accounts, into the respective account, and into the country chart of accounts in respective accounts. You need not post three different transactions to get the financial statements as required for the requirement. You just post one transaction in the operational chart of accounts, and system internally generates or posts the transactions into the respective GL accounts, whatever is linked to the main GL account. Does that give you an understanding of the organizational structure, how that is structured and how they are related?
Yeah.
Good. And apart from the company code and operating concern, there are a few other elements that are available in SAP to do the management reporting. Those are called the segments and profit centers. Segments are nothing but an self-contained business unit within a company code. Let's suppose in our example of ArcelorMittal, they've got the steel production and the services as well. So they can have these two as the different segments to track their costs, revenues, to do their analysis. The advantage of having these segments in SAP is it provides the flexibility to generate its own financial statements within the company code. They may not be relevant for external reporting, but for internal reporting, if they want to know how much is the asset base or how much is the liability in an entirety of services or for a steel production, they will be able to do that using the segment, creating a segment and having the segment in the transaction posting. They'll be able to do that. So how this segment is derived in a transaction is based on a profit center. Profit centers are similar to segments, but they are one level below from the segments. When you create a profit center, you assign that to a segment so that it gets consolidated at the segment level. Let's say in our same example, the steel production of ArcelorMittal as a segment, but they've got the plants across the globe, or they've got different grades of steel, and each has got its own parameters and uh, its own revenue stream, or the cost calculations, and they can be identified separately. Let's suppose in the steel, you may have the cold rolls and the hot rolled steel, and as well as some other different steel grades, where in the cold rolls is something you produce the steel, and using the elongation operations or something, you just stretch the steel rods or the blocks that you produced into the different sizes whatever customer is required. So it requires a separate set of the machinery. It requires a separate set of the planning that is required, some different sales force that is required to go to the customers and do the marketing. So all this can be identified separately for the cold roll, whereas the hot rolls, you need a separate setup. You need a furnace to do the heating of the of the steel, and then use your specialized machinery, because it is a hot steel that you will be rolling. You need to have the machinery to withstand the type of a heat, maybe thousands of degrees of heat. So you'll have a separate set of machinery identified for that. So in those cases, even though everything is steel production, but you can still, using the profit center, you can identify or segment the different revenue streams in the organization, and those are called the profit centers. Give me 1 minute, my kid is awake up. Apologies for that.
It's okay.
Yeah, so you use profit centers to identify and do the profit center reporting, and all these can be derived in the transaction itself, so that in one transaction you'll have all the information to do your analytical reports or the line item reports, whatever that is required. So this the top bit, except for the plants, is the finance organization, finance setup, and you can see the importance now of a finance consultant in setting up the enterprise structure. Once this is set up, then the other streams will build their organizations below that, be it the sales organization, or be it the materials organization, or be it the production organization, is built under this. It starts with the plant. Plant can be used as an integration object in finance, in materials management, and in sales as well. You needed that in the materials management, where to identify where a particular product is stored in, that is created as a plant. But you'll manufacture that before that can be stored, right? So in the production planning module, you use plants to identify your manufacturing operations or where are located. And when you're doing a sale, you need a plant to deliver your goods. So it's an integrated object, the plant. And using in the financial accounting, using the plant, you identify how much is the cost associated with a different plant. Each plant for the same product, each plant may be having different costs. Let's suppose one plant, I'll take an example, one plant is in Scotland, one plant is near London. So if you're sourcing the materials from one central location, the transport cost to Scotland will be different from this transport cost to London. So that will influence the product cost of a product as well. The product that is produced in Scotland will have a bit more higher transportation cost than the product that is produced in here. So that will give the flexibility for the cost controllers to decide at which plant they want to produce a particular product. So that gives that kind of a flexibility. So in a nutshell, this is the finance structure, and we'll elaborate on the bottom part of the enterprise structure when we actually get there. So keeping this, I'll just quickly go through a few topics. Yeah, so that enterprise structure, what we have just seen, is created in this node, enterprise structure, in the definition. In the definition, you create all of them. In the assignment, you assign all that objects that are created into the link to the other objects, so that you're integrating that with different objects to make the transaction flow easy between the modules. So let's start from the top. On the top that you have seen is an operating concern. So operating concern is a controlling object, so that is given under controlling. You see that? Create an operating concern. I will create one. I will say T009. We go from bottom top.
If you don't mind, can you bit zoom the screen because it's very small, the font size and everything.
Unfortunately, I'll not be able to because I'm using a VPN connection to access the screen, and
Okay, okay,
it doesn't allow me uh, the screen resolutions. It has got the defined ones. I can't change it, unfortunately.
okay, okay.
Is it
That's
very
fine.
difficult that you cannot read it all?
No, it's not very difficult, but yeah, bit.
I'll see. I'll ask the provider if I can have some flexibility to change the resolution.
Yeah,
But bear with this for today. Sorry.
no worries. Thank you.
So I'll create the operating concern here. It's just a naming convention. Nothing more assignments there. So we'll say we'll use this transport request throughout our session. So that is now created T009. And then the next bit is the controlling area. Controlling area. So controlling area, you will have to copy it from the existing controlling area. So cannot create it directly. If you say use the structure, so you'll have to use that structure sorry, to do the copy. And when you do the copy, it will provide you an option to create few objects together. So it's asking me whether I want to create the company code and plan together, or controlling area and company code together. So or the sales organization distribution channel all set up at the same time. We'll use the controlling area and company code so that it gives us the flexibility and or opportunity to create controlling area and relevant company code at the same time. It saves a lot of time for us. I'll choose the structure. So it proposing the standard SAP provided controlling area and company code. So this is the source. And now if I select that copy our structure, it asks me this is the source and what is your target. Let's say T009 is my target controlling area, and let's say T109 is my company code. Hmm. Okay, sorry about that. Where is it? Okay, let's see that.
Maybe we can try T009, same controlling area name.
But it's not accepting. But it is copying, so it has to be a new one. Hmm. Give me a break. Ready? Right, just a minute. I just oh, I just want to change this 01 to a different one, but it's not allowing me. God. Someone change something. Ah, I need to do some change actually. Someone has changed. Now it is populating a wrong controlling area and company code, which doesn't exist in the list, as you can see in the navigation. It doesn't exist as an object, so that's the reason it is saying use an existing one. Oh, I need to make
No
so
worries, Avi.
we'll
We can see
we will
later
stop.
this one.
Yeah, we'll stop it today. Here we'll not be able to progress further unless we create a controlling area. on the controlling side. So I'll keep that as a pending one, but I'll work on this today. So that I'll show you that tomorrow again. But coming to the other objects, here company code. Again, similarly, like the controlling area, you need to create that from copy that from the existing one. It is always recommended to use the SAP provided company codes, and SAP has provided company codes for each country. So you'll have to use that template, copy that to the country in which you are creating a new company code. Usually SAP provides codes with the code ending 01. Let's see if someone has read. Yeah, if you see something, uh, popular change, all of them, right? But HI01 is used for Hungary, and for UK it is GB01. For US it is US01. So those are the standard SAP provided company codes. You usually use them to create your own company code with the name. So I'll use one existing one. 1000 to our company code T009, and when you do that, system will ask, do you want to copy only the GL accounts or the from the source into the target? I'll say yes, so that it will save a lot of time for us to do the calculation. And controlling area is set as 1000 for that company code. It will get that same controlling area as well, assignment bit. And the local currency is the currency of that company code in that country. Let's suppose you're creating a company code in US, your local currency will be USD. If you're creating in Europe, other than UK or Switzerland, you'll use euros as your local currency. In Switzerland, CHF; in UK, GBP, something like that. And this company code has got a currency as INR. If it is asking retain that INR or do you want a different one, so I'll say different one. So do you want to allocate a different company code currency? Yes, I want to do that, and I'll create this in the UK, so I'll be providing GBP there. Certain data is not copied, something like the number ranges and the values in the number ranges, those doesn't get copied with this transaction. Yeah. Do you really want to transport the number ranges? You don't need to transport the number ranges. Those can be created using a different function quite easily. Usually we skip, we do not copy the number ranges from one company code to other company code when we're doing the company code creation. Now company code is getting created. So you can see the meter here. Yeah, now the company code is copied from 1000 into 009. You can see that in the completed activity, it's been copied from that to that. So once this is copied, it has copied the description from the source into the target. You'll have to do the tweaking or modification of those. We did currency change already, but because we copied, it gets the address details and everything from the source. So you'll have to get into the edit company code mode and then access your company code. see it has got the same name. So double click on that, come here, and I'm sorry. Sorry, it's a bit slow here. And if you click on that small icon there, that is for the address details. Click on that and just change if anything it's not obvious. What did we say? I'm just giving the mandatory ones that are required. Right, so that is now created or changed. Let's say save. So that got saved. So you can create multiple company codes as required in different countries. This is just a creation here. You're not doing any assignments as such. In our example, where we multiple company codes, they're all linked to a company, maybe a group company, you could say. Usually, this group company is not used in any of the financial transactions, in a day-to-day financial transactions. But this is used in case where you're doing intercompany transactions between the company code. In that case, the company is used. Otherwise, it is just an organizational element where the company needs to be assigned to one. If an organization do not have multiple company codes, you will have one-to-one relation with your company. If there are multiple, then one company can have multiple company codes assigned to it. So here again, naming convention. So I'll say T009. To be consistent, I'm using the same object number for the higher level objects. Company controlling area, operating concern, and company. I'm using the same code. Usually a best practice. Company is training group. And just something. And this is situated in London. Other bits are not mandatory there. The currency and the other things you give at the company code level anyway. It doesn't need to be given at the company level. So that's how we create a company. And then we'll quickly go on to the assignment so that we'll complete the things that we've done today. You assign a company code to a company. Come then identify your company code, the 109. Sorry, it was T009. T009 company code, and T009 again is the company. You assign that, so the linkage happens. That's a warning. You can avoid, ignore. So the linkages happen, but there is no significance of this unless we are doing any intercompany transactions on this company code. And then in the controlling, we'll not be able to do this one because our controlling area is still not created. But okay, let's give another try. Okay, I'll do the changes in the system, and then we'll create a controlling area tomorrow, and then do these assignments. So
Yeah, fine.
we'll pause our discussion today, and tomorrow when we get we'll start at 6:30 again tomorrow. If that is okay.
Actually,
Is that okay? Tomorrow at 6:30.
and day after tomorrow I'll be quite busy. I have a training,
Okay.
so I will
Okay.
let you know if I can get the time on Thursday or
Okay.
Friday. Then we can continue.
Okay. Okay.
Otherwise, we
So
can
we'll not be
definitely
having
in the weekend. In the weekend, definitely we will do the classes on Saturday and Sunday.
yeah. So just a minute.